What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. I am not a financial or trading advisor. Please trade at your own risk. Now, I'm excited, man. 96 subscribers. We're almost to 100. Now, I know it ain't much to a lot of people, but that's a lot of subscribers to me. I'm just gonna go ahead and keep pushing out some quality content for y'all. This is getting me excited. Thank you for subscribing. If you're not subscribed, hopefully we can earn your subscription by the end of today's video. I do want to go over this setup that I took today. And it was a bummer. At the same time, it was so what happened was, let's bring it back right here. If you didn't watch my video yesterday, pretty much ICT says all that you need to do, and I can read this verbatim because I wrote it down too. Right here, ICT says all you have to do for you to quit your fucking job is find something that repeats every day that can yield you 5 handles. Watch price in the morning between 9:30 and 11. Wait for price to run through liquidity above or below. Don't even have a bias. You don't care about a bias. I want to see an obvious run above a high or relative equal highs and then reject that. I want to see an opposing liquidity pool. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, soon as it trades into that fair value gap, I'm using that. I'm putting a 5 handle stop loss and I'm waiting for it to rip. 5 handles, half my trades coming off, and then I'm waiting for it to trade into the opposing liquidity. There it is. And in 90 days, I'm quitting my fucking job. So if you haven't checked out my video, go check it out. ICT says that from one of his Twitter spaces. It's pretty crazy. And you know what? That's actually his 2022 model. So if you want to go and check that out, I recommend watching episode 2 through 10. I actually made a playlist as well for y'all. Y'all can go to my channel, and it's actually one of my public playlists that I have created for y'all. 23 videos in it. ICT, if I could go back and tell myself what I know now, part 1 through 4. Also, if he had to restart as a trader at 20 years old, part 1 through 3. His end series, part 1 through 4, these are pretty much teaching you how to turn trading into a business. And then his mentorship model, episode 2 through 10. And then lastly, risk management, money management. You need that in order to be profitable. Now, all of this is 23 videos total. If you watch one video per day and you implement that video, you'll be able to finish this whole playlist within 1 month. You'll be able to understand how to trade ICT concepts within 1 month. Okay. And whatever you want to do with it, that'd be awesome. Go get funded, do your thing. But I'm trying to get funded as well. I'm taking the FTMO challenge as well, the 50K. Today I took a trade right here. Price, how ICT says at 9:30, you want to see it take out a high or a low, right? So at 9:30, this is where we were. Let me bring out my tools. 9:30. This is where price was at 9:30, was this green candle, or that's 9:15. 9:30 was this black candle, and that black candle actually ran out liquidity. So at 9:30, I was looking for a sell right off this liquidity. So I dropped to the 1 minute, and you can see that liquidity a lot cleaner. You can see that it was ran right here. And once price took out this structure right here, this was the market structure shift right here. And then it had this displacement candle as well as this displacement candle. So whenever it has two, ICT says, make sure you take entry off the first one, because it would suck if it tapped that one and just moved away and you were trying to enter off of this one. So take your entry off this one, but put your stop loss in consideration of them both in case price wants to go back up into that one as well. So I took entry right here. I put my stop loss above the one candle of this fair value gap. And if we just play it out, see what happens. So price got to a 1-to-1 R around there. And at that point, it started consolidating a bit. And right here, I actually, once it hit 1-to-1 R, I didn't claim any of my position at all because I apologize, I was loud. I'm at a 0.25% risk at the moment, simply because I've been cutting my risk. I'm on a losing streak with the FTMO. So I didn't want to take a 125, I didn't want to split that $125 on 0.25% on a 50K account is $125. Okay. I didn't want to put, $125. I didn't want to take $75 if that's what it is. Yeah, $75. I didn't want to take that. So I just left it running, but instead I put my stop loss at break even once it started consolidating. Once it hit 1 to 1 R, I put my stop loss halfway. So if it did come back, it would only stop me out a little bit. But once it started consolidating, I got a little nervous about it. So I put my stop loss at break even. You can see that's where I put my stop loss at. And as I play it out, you can see we got stopped out at break even. And I'm glad that I did that because we would have got stopped out overall. And look at what Price did. Price ended up tapping back into this, taking out this liquidity. And if you notice, it was actually like a 5-minute consecutive candle order block right here with these 4 candles just all in one line. If you went to the 15-minute, you could base it off of this right here. You could say that this was the order block. But I'm basing it off the 5-minute 4 candles, just because it also brings in that wick as well. And you can see it taps it. There was no 1 minute market structure shifted right here on the 1 minute, created a gap, but there was no candle that came back into tap it. So you could have potentially taken your entry off that 5-minute order block. You could have been like, enter there, stop loss above there. But I'm looking for the market structure shift on the lower time frame. You could have entered here and you could have won a good, you could have targeted this low, or you could have targeted this low down here, and you could have won like a 1 to 5 R or potentially a 1 to 3 R. If we play it out, we'll see what happened for the rest of the day. Yeah, oh yeah, you would have won a 1 to 5 R plus if you would have went at it this way. And this is kind of exactly how ICT said, you just want to see a run of liquidity, and then any fair value gap, or, this is an order block. You can also do it off an order block too, but there's also like a fair value gap right here. If you look closely, right here on the 15-minute, there's a fair value gap that price tapped into. The 1 candle of that fair value gap was respected as well. So that is a valid fair value gap, in my opinion. You can see that it was respected to the point. That candle didn't run it whatsoever. So yeah, you guys, it's totally how you want to look at it, how you want to be a part of that. It was a bummer that I got stopped out at break even, and because I didn't take entry off of that 5-minute order block, I was looking for the 1-minute market structure shift. But with the market structure shift, price did create the fair value gap and the displacement candle. It just didn't tap into it, and it didn't give us any entry. So I wasn't a part of the bigger move. I did get stopped out at break even today. It was a bummer loss, but oh well, it's better than taking a full loss. A break even is not really a loss, but yeah, you guys, this is gonna be it for this video. I just wanted to go over this little trade for y'all today. I seen where I went wrong. I seen where price did have its reaction from, and I did want to present it to y'all and show you guys a little bit of this. And again, this is for my own learning purposes and for entertainment only. I am not a financial or trading advisor. But till next time, thank you guys for watching. We'll see you guys next time.